Hey folks, it's Simon here with your Tao Daily update for market close 2nd of September 2025. Tuesday saw further weakness in the SPY. We had a down Friday, down Tuesday. Obviously the market was closed on Monday for Labor Day. Now, the S&Ps, look, they were going to have begin the month of September, which has got that scary seasonality vibe about it, down more than 1%. The market did manage to rally intraday and cut some of those losses, with the SPY ETF closing down 0.74%, which brings us back to a potential Fibonacci symmetry level here. This pullback here is now pretty much identical in size to the prior one. Now, if we don't hold this level, we've got another support level down here, which is measured against this pullback, and that aligns with the 50-day simple moving average as well. If we don't bounce here, we've got another potential level of support just below at around this 628, 630 level, and of course, we've got to be open-minded to the possibility SPY could slice through both of those, in which case we would be looking at a much bigger pullback. September has been the worst percentage loser for the S&P, the Nasdaq and the Dow since 1950. But importantly, the first couple of weeks of September tend to be neutral to bullish. Second week of September has actually got pretty bullish seasonality. It's usually the second half where things start to come a little bit unglued. Don't think about September seasonality being bad and rush out and try and short everything today. You could end up getting your face ripped off if we do have a decent bounce or a decent rally. Even though the day on Tuesday started bearishly, there was absolutely no bearish follow-through. In fact, you could even argue that the bulls won the day, with S&P closing at the highs despite a lower close. If we do get a bounce here, we're definitely on for a challenge to the previous high. It's not that far away. This blue line that I've got drawn on the chart, if we zoom out, this is just a Fibonacci extension level from the previous high in February to the April. It's a big level, and it certainly makes sense why the S&P found some resistance there. In terms of economic data, the big number looming this week is non-farm payrolls this Friday. If we have a continued weakness in the employment data that we saw last month, that would embolden the market to factor in a Fed rate cut in September. Super cut of 50 basis points, as Besant has been arguing for. Certainly gold is loving the idea of rate cuts. You can see gold has broken out to new all-time highs with some conviction. We've got two consecutive closes above this resistance level, and that was the previous all-time high there. We've broken out of that with some conviction. Gold really looks set to sail here. Silver doing something similar. It's not at all-time highs, but it is at new 14-year highs. Keep a bit of an eye on the dollar, though. Now, the dollar here looks like maybe trying to find a base. If the dollar moves up or down gradually, I don't think it's going to have any impact on any other asset class. If we do see a sudden acceleration higher in the dollar, which nobody is expecting right now, everyone's sort of focused on the fact that the Fed's cutting rates and inflation mandates are not being met, therefore the dollar should weaken forever. If we did have a sudden acceleration higher in the dollar, that's something to keep an eye on, because that really could be a prelude to some renewed weakness in equities and other risky assets. That's what I got for you today, folks. I hope it helps. I wish you good trading, and I'll catch you next time. Thanks for tuning in.